Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com. Disclaimer: Token Metrics Media LLC does not provide individually tailored investment advice and does not take a subscriber's or anyone's personal circumstance into consideration when discussing investments, nor is it registered as an investment advisor or broker-dealer in any jurisdiction. Information contained herein is not an offer or solicitation to buy, hold, or sell any security. The Token Metrics team has advised and invested in many blockchain companies. A complete list of their advisory roles and current holdings can be viewed here at tokenmetrics.com/disclosures.
Alrighty, we are going to go live. Start filming.
Okay.
Hello, everyone. Welcome to the 100X Show. I'm Ian Blaney, your host, and today we have the pleasure of being joined by Maddy Greenspan, who's the founder of Quantum Economics. Maddy, welcome to the show. How are you?
Thanks a lot, Ian. Yeah, thanks a lot for having me.
Awesome. It's a pleasure. So I had a chance of meeting Maddy in Malta during the Malta AIBC conference. Both of us were in panel together, and most of you might know him from his prior work on eToro as an analyst. He's been on TV, on Bloomberg, CNBC as well, I believe, and some other networks.
Yeah.
So definitely well-versed in crypto. So welcome to the show. And first question we have is, who is Maddy?
Hi, my name is Maddy Greenspan. I'm the founder of Quantum Economics. I'm a licensed portfolio manager in the European Union and the author of the Complete Guide to FinTech Investing.
Wow, very, very, very fancy. So how did you get involved in crypto, coming from traditional finance?
Yeah, so, after watching the devastation that was wreaked on the world in the 2008 financial crisis, understanding some of the things that led to that, and then the quote unquote recovery efforts from central banks and governments, it was quite refreshing when Bitcoin first crossed my desk. I got an email. I was working with eToro at the time. I got an email from Yoni Asya, the CEO. I believe you interviewed him as well.
Yes, I did.
It was just immediately I understood the potential of something like this. I realized that this is the future of money. So, and I even posted that. I went back to Facebook, and we were all using Facebook back then. I posted, "Hey everybody, this is the future of money." Not too many responses. But I guess I was just lucky enough to be one of the people who embraced it right off the bat, because I know that a lot of people in the financial community were not so optimistic about it and felt like, they're quite happy with the status quo, which I kind of don't understand given some of the pessimism regarding the status quo.
Okay, so can you kind of delve deeper into why you think crypto or Bitcoin was the future of money?
Just because we have all of a sudden something that is independent of governments and banks, and really is something that is born on and controlled by the internet and the community, and is a network in itself. So just understanding the potential of this new technology, I think it should be, it should be apparent to everybody that Bitcoin equals freedom.
Well said. So let's delve deeper into your background.
Sure.
So what were you analyzing when it comes to traditional capital markets? What was your focus?
Yeah, so my focus has always been, ever since I was a child, anything that is traded globally. So macroeconomics in general, like seeing the big picture. And that includes commodities and stocks and bonds and all of those awesome things that people like to trade on. Currencies, I believe that was really, when I got into day trading, it was always about currencies because they were so volatile at the time. And, you know, there
What,
was...
so was that under your company? Were you working for a firm?
So I don't know which period you're talking about exactly, but so I've been, you know, paper trading from the time I was 13.
Oh,
Um,
wow. Okay, well, let's go back to 13. So you began
yeah, sure.
trading at 13. How is that like?
So it's just an interest in gold, actually, and the price of gold and how it moved. And so my grandfather is actually, he's a self-made billionaire. So you know, yeah, and now both of my brothers are running his company. So you know, we learned a lot from him, I think. And
Millionaire from gold or from as an entrepreneur?
yeah, for the most part, as an entrepreneur, I mean, he's worked hard his entire life, and I think that he's really somebody who He deserves it, and very business oriented, and he got into the right things at the right time. Um, you know, I will not go into his entire history, but I would say that he made his mark really in real estate, where he buys out apartment buildings and shopping centers, renovates them, raises the property value, then goes back to the bank and refinances them, gets more and more credit, and built his empire. And then in 2009, after having all this credit with this bank, having all this credit with the banks, he was able to just leverage all that credit and put it into the markets, and that's when he was able to really exponentially grow his net worth.
So he basically bought the dip.
He bought the big time,
Big dip.
big time. Yeah, that big dip, and leveraged it the entire way up until now.
So this was during the recession, 2008?
Yeah, basically, yeah. 2000, I would say 2009, 2010, when he started looking into bonds for the first time. And I remember him breaking his head over, you know, what's going on here and how to calculate these things and how to formulate a strategy. And he would share all this stuff with us, right? He was quite open about it at the dinner table. And then once he got into the stock market and, you know, doing calls and puts and all those type of options, it was just like printing money, because, you know, he had so much credit, and as long as he's able to make more money with that credit, the bank just give you more and more credit. So it was just like a never-ending story.
So what were you doing around that time? Because that's also when Bitcoin was bubbling up. Bitcoin was created in 2009. What were you doing around that time?
So I got my first job in a financial institution in 2008 at Ava FX.
Huh?
Yeah, exactly. I was able to, you know, I really had front row tickets to the end of the world there. And you know, I was an account manager as my first position, and, you know, helping people with their accounts and with their strategies. And over time, people just kind of liked what I was writing, and they, you know, and that just got kind of throughout my career, just kind of became bigger and bigger part of what I was doing until around 2017. I was able to put out some viral videos for eToro about crypto right at the beginning of 2017. Like, why is Bitcoin rising right now? Right when it just passed $1,000, right? For the first time since 2014, and then when it broke a new all-time high, and that really helped eToro's marketing efforts a lot. And then I transitioned to being really a full-time analyst, and after that, even helped them start to build out a global analysis desk with several different analysts around the world in their various offices.
Very interesting. So what is it like when it comes to analyzing cryptocurrencies? Because crypto is different from any other market out there. So how do you approach it when you're analyzing Bitcoin and other crypto assets?
I think that there's actually a lot more similarities than differences. You know, as far as technical analysis goes, I think that Bitcoin really it does a lot of textbook moves, right? We have these huge, you know, descending triangles. We have these channel formations, head and shoulders patterns, reverse head and shoulders patterns. I think the Bart Simpson maneuver, I think that's really a uniquely Bitcoin kind of setup. You don't see that very much in other markets, but I think that's kind of because you know, Bitcoin is so new that there isn't as much volume as you'll see in some of the other global markets. There isn't as much liquidity, so sometimes large orders can move the markets a lot more than they would in other markets. But other than that, I mean, the technicals are very textbook in a lot of ways. And the fundamentals are unique only because we're dealing with a new technology.
Mm-hmm. Now, just to go back, can you explain the Bart Simpson maneuver for those who might not be traders?
Sure. So Bart Simpson pattern is uniquely Bitcoin pattern where you know, the price is just kind of moving steadily along, and then all of a sudden it'll jump up like that, and then it'll keep moving steadily along like this, kind of creating Bart's hairline, right? And then it'll jump right back down to where it was before and keep moving. So that's called a Bart Simpson pattern. And then there's the reverse of that when it's going along, jumps down, right? And then does the hairline on the bottom and then jumps back up. So that's a reverse Bart pattern. And I think that a lot of the time it's caused by, you know, the various contracts and options that expire. You know, in futures contracts, when a futures contract expires, all of a sudden you have a large order on the open market exercising that contract. And then when it gets renewed over time, or when people build up their positions back up, it reverses. I mean, I'm not really sure exactly what causes each and every one. I guess is a bit unique, a bit different every time it happens. But you know, the market has a price, and then all of a sudden that price is altered by sometimes 3%, 5%, or even more, and then it returns to where it was before.
Now, you also have a portfolio up on eToro. So can you kind of speak about how you went about creating your crypto portfolio or that model portfolio?
Yeah, so I mean, even as I was leaving eToro, you know, speaking with Yoni and with the team there, that was always something that I wanted to do. I mean, I said, look, you know what, you know, we had an amazing run. It was 7.5 years I've been with eToro, and you know, both I and the company grew together in an amazing way. And you know, why not? I like to trade, and I like to trade in a social way with, you know, showing other people what I'm doing and how I'm doing it. So you know, it's just a natural fit.
So what was the reasoning in terms of building that portfolio? Any thought process? Can you kind of take us behind the curtain?
Um, just to be able to share my trades. I was faced with the decision just as far as where to open the account, simply regarding eToro's terms and how different locations, how they offer, because eToro's uniquely offers different customers in different locations, very similar service, but a bit different the way it works on the background. So for example of that, in Australia, you can't trade real cryptos. You can only trade CFDs of cryptos, right? So eToro likes to, yeah, it's a weird one. I don't know why. Something about the banking system there. Probably they're just scared of crypto. So they say, yeah, you can trade on it, but we don't want to see you actually using them. Whereas, you know, eToro's customers generally, they rather trade on the real asset. So in most of the world, you're trading on the real asset. But if you sign up from Australia, then you're going to be trading on a CFD. So because I hold both the US passport and an Israeli passport, it was just a question of which one I'm going to use to open the account. And in the end, the US won out but still there are restrictions. So for example, in the US, eToro only offers crypto at the moment. And I mean, I'm a licensed trader. I like to trade on everything. I mean, I've been trading for forever. So all of a sudden to be trading only crypto. So this is why everywhere where I'm talking about this account, they say this is a crypto only portfolio. And as such, it is a high risk portfolio. It means that you can lose all of the money copying, and you need to take that into account when you make that decision to copy me.
All right, so let's pivot to your new company, Quantum Economics. So tell us about that.
So Quantum Economics was a blog that I wrote on Tumblr.
Oh man, Tumblr.
When Tumblr was popular.
Yeah.
I think it's been abandoned for a while. I think the site is still up. I don't know.
Tumblr has been replaced by Medium.
Is it?
Yeah.
Okay. I mean, you mean like physically they actually changed ownership, or?
No, like just more on the sentiment and users.
Yeah. Sure. Right. In the same way that I guess Snapchat was replaced by Instagram or whatever.
Yes. Yeah.
Whatever the kids are using these days.
Okay, so it's your new company. Can you tell us more about the company, what it does, the investment strategy, philosophy, the content making?
Yeah, so it's basically my actualization of all of the little bugs that have been in my head for the past, I don't know, 5, 10 years, of all the things different things that I wanted to do, and finally have the opportunity to go out and do them. There's three main pillars of quantum economics, which is analysis, advisory, and money management. So on the analysis side, and you'll see it right when you come to the website, we actually have a brand new website just put up today. Right when you come to the homepage, you'll see to sign up for the newsletter. And the newsletter is something that I did also in eToro, and people really loved how I write, and they loved reading my newsletter and updates on the market every day. So I said, you know, that's going to be the first thing. And the first iteration that I did of Quantum Economics website was just basically a landing page for people to sign up for the newsletter. And I had that up fairly quickly, and we're growing in subscribership quite quickly as well as the community grows. And I really do see the Quantum Economics newsletter, the QE newsletter, as a real community. So for example, I was writing about the new FC Barcelona token, right? Mm-hmm. And then I actually had the CEO of Chili's, who was producing the token, wrote to me the next day going, "What, you know, you had an inaccuracy here." So I had to print the first retraction on Monday. But it was a fascinating conversation. Apparently he's reading the newsletter, and also people from all of the biggest newspapers, financial newspapers in the world. So Wall Street Journal and Bloomberg and CNBC, and of course throughout the crypto world. So that's really I think it's quite important that I keep in touch with people, and that's my connection to the markets, because the markets are people at the end of the day. I know that there's a lot of algos and bots out there, but at the end of the day, it's the people pulling the trigger, the people making the decisions, and that's how I see the markets, is through the people.
So, and by the way, great newsletter. I'm subscribed to it as well. Definitely recommend our audience to check that out.
Thank you.
So that's a daily newsletter. And I think the fact that you're putting out content every single day on a daily perspective is, first of all, somebody who makes content, I know how tough it is to always have an opinion and write that out in a very fleshed out manner and then hit send every single day. Because Bill on our team also does that as well. And in crypto, sometimes you push send and the market goes the other way.
That happens, yeah.
Yeah, so doing that in crypto is definitely no easy task. And the fact that you put together a very good newsletter is definitely something that I admire.
But the trick is to always give both sides of the market, right? And you see sometimes these, like you said, like a headline comes out, and then you hit send and 5 minutes later it's completely toast. I mean, you might as well delete the entire article.
Yeah.
So after experiencing that many times over the last 10 years, it's not just a crypto thing. It happens in the traditional markets too. So I've learned that even though I am licensed to give advice, trading advice, I'm not going to do that unless it's for a specific client under specific circumstances, meaning that I understand their portfolio makeup, I understand their appetite for risk, and then I can really advise to the point and tell them what's good to add to their portfolio, for example.
Okay, so that was the first pillar. That was analysis, and the second pillar of the company?
Advisory. So helping companies grow, helping projects get off the ground. Already have 3 clients signed up, and I'm able to advise on all kinds of areas of the business, from market building, for example, how to build up a market from scratch, which is a very difficult thing that a lot of projects are trying to do now as we go into this brave new world of new markets. Token economics, PR. If people are looking to, get their name out there a little bit more, I can really help with that. Social media,
quick tips,
you name it, whatever is needed for the client. I'm able to sit in on meetings and help them to push forward in whatever way I can.
Any quick tips for the audience who maybe is trying to get the word out there in the crypto space or get their project more exposure?
Stay true to your vision. I mean, when you start the project, usually you have this kind of seed in your head of what you want to see happen and how you want to change the world in some way. If you don't have that, you might as well be working for somebody else. But when you have that, stay true to it and cultivate it.
Well said, well said. I fully agree with that. I think having vision is something that's needed for any entrepreneur trying to go after a big goal, right?
Yeah.
So, because we've seen all the visionaries, hence the term vision.
Right.
So
funny how that works.
Right. So let's take a quick glance at the markets. Definitely not any kind of investment or financial advice. These are just our pure opinions.
Sure.
So on our last live stream, we covered the narrative for why we think cryptocurrencies are turning bullish. And the 3 main narratives I see myself are: 1, we have the Bitcoin halving that's happening. Then 2, we have Ethereum 2.0, which our dev team is very, very bullish on. And
really? I'd love to hear more about that.
Yeah, so Paresh, our blockchain developer, is very, very bullish on Ethereum 2.0. He's saying a lot of projects out there that are claiming to be faster than Ethereum or do X, Y, and Z faster than Ethereum will become pretty much worthless once Ethereum 2.0 launches, because it will be that drastic of an improvement.
Wow.
And then the third narrative we see is DeFi, decentralized finance.
Yeah.
We have over $1 billion now in DeFi, and seeing all these 3 narratives come together, we're very, very optimistic for crypto in 2020, and curious to hear your perspective on the market.
Yeah, I would say so. I mean, especially 1 and 3, I mean, I think have been major drivers of the market. I'm interested to hear your feedback about Ethereum 2.0, because there's a lot of talk on social media, and we've been waiting for this forever. So I don't know if and when and how it's going to happen and everything like that. And
so
it's
going
not
to gradually.
Yeah.
Last time I read on CoinDesk, they mentioned that they expected Ethereum 2.0 to launch end of Q2. So target is around June.
Sure.
June, July. Now they've always been pushing it back, but this time they pretty much said this is pretty much it.
Sure. So well, Vitalik came to visit eToro in I don't know, I think it was September of 2017. I had the pleasure of recording him there saying something along the lines of, yeah, we're going to have Constantinople out by the end of the year. Yeah, so when you tell me these kind of deadlines, I have to take it with a pinch of
Absolutely,
salt.
absolutely.
But I mean, I have every confidence that they'll scale as needed, just like Bitcoin will, and is. I mean, is scaling as needed. I mean, you don't want to grow a network too fast, right? Because then you run the risk of things breaking. And I think that we're seeing cracks in the DeFi world as well now. Over the last 24 hours, there were two blatant manipulations of DeFi smart contracts that have been in the news.
The
And
person that moved $360,000 of Ethereum.
yeah, and then another one with $1 million, I think, earlier today.
What's
So
your take on that? Do you think that's
I'm still piling through it. I don't understand it on a technical level. You know, the guy who did it must have been a genius, but as I understand, he didn't hack something as far as access is concerned, but rather,
I don't think it's. I think the word hack for that case
yeah,
is
yeah,
is the wrong term.
right. He found a loophole.
Yeah, he basically found a loophole, right? So what
Yeah,
he did is he there's some protocol and application that lets you borrow money without putting up any collateral, as long
yeah.
as you pay back whatever you borrow
Mm-hmm.
in one transaction.
Uh-huh.
So what this person did basically is using some other software, I think BZ and some other software, he basically made a smart contract that had like five different transactions
Yeah.
where he could borrow money, then hedge. So he went long on, I think, a pair for BTC and went short on some other currency, I think Ethereum. Then
Mm-hmm.
money from the other, dumped the price, made money from the short,
Yeah.
and paid back his loan,
Wow.
all in one transaction.
Amazing.
So
It's
it's
amazing. You
manipulation, really.
got to be in awe of people like that. And this is what I wrote in my QE newsletter about a month and a half ago when I started covering DeFi and before we hit the $1 billion mark, in preparation of the $1 billion mark anyways, was that what's exciting is that we have new economic models that are being tested, which are inherently free and global in nature and inclusive of all people. They're independent of the Fed. So, for example, in September, uh, the traditional market broke down. A lot of people don't know about what happened in the repo market, where overnight lending rates, which are supposed to be between 1% and 2%, all of a sudden spiked to about 10%. And this is a market with trillions of dollars flowing through it every single day on Wall Street. So the Fed had to move in and react quickly in order to beat those lending rates down, right? And they do that by injecting lots of cash into the market. That's what they do. In DeFi, you don't have that. There is no Fed to beat rates down. So if the overnight lending rate is 10%, it's 10%. That's what the market is willing to pay. That's what the lender is going to get. So there's no Fed to manipulate you out of market forces and a fair rate. However, on the other side, you don't have the Fed to bail you out when something goes wrong. And things do go wrong. I mean, I remember investing in a new project called the DAO. I don't know if you remember that back in 2014. And then somebody came and hacked 2 lines of code, and the whole project came tumbling down, causing them to rewrite the entire Ethereum and splitting the network eventually. So those type of things do happen, and there's no Fed to bail you out when they do. So as we're in the experimental phase, that's really fine. There isn't a lot of money there, and I think that most people who are involved, and I hope most people who are involved, are only investing small sums that they can afford to lose, and that they're diversifying themselves into many other different investment types. And I think that that's really critical from an individual perspective. And I think that a lot of people learned that the hard way in 2017.
Yeah, absolutely. I think one thing we've learned in crypto is, as many times as I've heard other people, even myself, tell everybody, only invest what you're willing to lose. But I mean, studies there've been studies on this. People hate losing money, even if it's money that they've put
I wonder why.
as money they're willing to lose.
Yeah.
Once they actually lose it, they hate it. Because this was a book I read. I forget what the title was, but they said that based on their study, people feel twice as much emotions when they lose money as to when they make money.
Yeah.
So when somebody makes like 100x return, if they lose money, it feels twice as worse, right?
Yeah.
It's the number of emotions.
Sure. I've seen it as an account manager over the years. I've seen it over and over again. So that's all part of the psychology of trading, and that's why we need to manage money correctly. Yeah. Going back though, you mentioned there was 3 things that are moving the markets. I wanted to add number 4, and I think that a lot of people aren't thinking about it, which is Federal Reserve and other central banks pumping money into the system. We can see very clearly the effect that it's having on the stock markets, where stocks, even though there's coronavirus and potential massive supply shocks, Apple's already announced that they're going to be short devices, and I have a feeling that over the next few days and weeks, there's going to be others companies out there. Pretty much everything is made in China these days, so this is a huge risk. Nevertheless, markets are zooming towards the sky, and this is largely based on free cash that's being pumped into the market. And free cash is being pumped into the market over the last many years, and they've only amplified those things lately. So the crypto market also benefits from that, because crypto is, even though it's largely uncorrelated with other markets, it doesn't look to gold and say, are we trading safe today or are we trading risky today, like other assets do? But the money that's being invested in crypto comes from somewhere, right? And the more money that the central banks push into the system, the more is going to end up in all kind of speculative assets. So that includes crypto.
So what do you think would happen? Because eventually this house of cards has to crash.
We hope not.
But I mean, because quantitative easing and all these markets that are being propped up, because we're in the biggest economic bull run in stocks in a while.
Probably in history, yeah.
Over 10 years, I believe, right?
Yeah, since 2009, the bottom in 2009 until today. So 11 years.
To me, this just screams that this balloon is eventually going to pop, because nothing goes up indefinitely. And if it's been going up for 10 years, it's pretty much a good time to maybe take some profits off the table. But either way, though, the question I'm getting to is, because this is a question somebody asked us as well, so I'm curious to hear your take on this. If stocks crash, is that good or bad for crypto? Because I see that, yes, some money will flow to crypto and Bitcoin as a haven away from stocks or as a hedge. However, crypto and Bitcoin is also a riskier asset class. And in a recession, not every investor wants to have their money in a riskier asset class. So Chris, your opinion on that?
Yeah, so this is, we could probably write a whole book on this one. Why not, right? There's only, it's only a matter of time, right? And how much time there is in the day. So I think that the first word of your question was if, right? If the markets crash. And I want to give you 2 quotes from former central bank governors. So basically the people who've run the economy in the past. One is Janet Yellen, who said, that we will never have another financial crisis in our lifetimes.
Wow.
Yeah, and I mean, she believed that when she said it, and that was not too long ago. I believe it was
I
in
find that hard to believe, though. Never say never.
very difficult.
But,
It's a very difficult statement to swallow as somebody who studies history. But you know, I believe that she believed it. And the second is from Alan Greenspan, no relation to myself, obviously. But he said that the United States will never ever default on their debt obligations because they can always print more money. So meaning they can borrow as much as they want and they'll always be able to pay it back because they're the ones running the printing press. So these two statements, when thought about in conjunction, lead to a picture that if people buy into them, and for as long as people buy into them, markets can go up indefinitely, right? As long as there isn't some sort of a black swan catalyst that would send them the other direction and cause people to be fearful and take their money out. So with all of the money that's being printed, it needs to find a home. What concerns me is that after 11 years of very heavy money printing, at some point, the value of money has to come down. It's just market dynamics, supply and demand. I mean, it's very basic market dynamics, right? Which say that the more supply that you have, eventually that brings down the price. Now, that really hasn't happened much over the last decade, and it's kind of a wonder why. For example, when they started in 2009, they invented the word quantitative easing, or the term quantitative easing, and they started pushing money into the markets for the first time in history that something like this had ever been happened in a free market, where the Fed all of a sudden steps in as the buyer of last resort and say, okay, nobody wants these bonds, fine, I'll buy them. Nobody wants these stocks, no problem, I'll buy them, right? This is no longer a free market, obviously. But when this started happening in 2009, the economists flipped out. They were like, are you kidding? You're going to get inflation. So everybody went to buy gold. And gold went from about $700-800 an ounce all the way up to 1,900. In 2012-13, it topped out at 1,900 and then started coming back down. Why? Because the inflation never showed up. I mean, people were all going for this gold as a hedge against inflation, but the inflation never happened. And then the Fed looked around, they're like, where's the inflation? I don't know. Do you see any inflation? I don't see any inflation. No inflation. All right, let's keep printing. And then 2014, they said, okay, we're going to stop printing for now. Let's look around. Where's the inflation? No inflation. Let's keep printing. All right. And then the last round was 2018, when they were finally starting to, for the first time, reduce their balance sheet, right? They were starting to pay back the bonds that they had borrowed. And they were starting to, for the first time since the financial crisis, actually try to normalize the economy. And then all of a sudden in September, repo markets went nuts. All right, let's keep printing. And now they're pushing more money than ever into the markets. So the concern here, of course, is on the currency, right? It's not the stocks. The stocks can keep going up forever. But what happens at the end of the day to the currency that's being debased? There's only a certain amount. We've seen that happen in smaller economies like Venezuela and Argentina and Zimbabwe and Turkey and Iran. And I'm sure there have been others, even in the last decade, that have seen hyperinflation or inflation above average levels, above 10% per year. Not even getting to the ridiculous levels of 1,000,000% per year like they have in Venezuela. With a larger economy, it's going to take a lot longer for the market to get saturated to the point where printing efforts are going to reduce the value. However, what we don't know is what will happen once the market does get saturated, or how long that will take. If it happens tomorrow, though, it could be very bad indeed.
Wow. Okay. I mean, very good take. So, one question that comes to mind now is China.
Yes.
China is a big player because China is their goal is to displace the U.S. dollar as the world's reserve currency.
Yes.
So, and then we also have what's happening now with the coronavirus and how that's affecting the entire global economy.
Right.
So, what's your take on how China fits into crypto, economic trends, and the future?
So I think that China is it's interesting on a lot of levels, and it's very likely that they're going to be the next economic superpower after the United States, as it seems today. They're also making massive efforts to create their own central bank digital currency. I feel like if it weren't for coronavirus, they probably would have announced it already. I don't know that China is a very long-term player. They have a long-term way of thinking, and I don't know that they're necessarily trying to make the renminbi the one reserve currency. But I took a course from a professor in Hong Kong a few years back, which basically laid out China's strategy to become the third leg in the financial system. So he basically explained it that the world is right now on two wobbly legs, the US dollar and the euro. And then when you add a third, which could be the renminbi, then you have something that can really stand on itself, right? Obviously, if it's all on the US dollar, then we're in a real, a dangerous place because we run the risk of contagion. I feel actually that Bitcoin really can come in and serve as the fourth leg, which I think would be wonderful to see it actually stabilizing the world economy in contrast to many fears there were. What scares me though about coronavirus is the production gaps, and everything is made in China these days. And earlier today, I was on the radio in Washington, D.C. about this hypothesis that, so Nintendo 2 days ago announced that they're not going to be able to make enough Switch consoles to satisfy market demand. Basically in Japan, where Nintendo was born, you can't buy Switch consoles at the moment because China's not making enough of them. Yesterday afternoon, Apple announced that they're not going to be able to make enough iPhones to meet demand. Now, these are high-end electronic products, but everything is made in China. And we don't really know. First of all, I don't want to get into conspiracy theories about the numbers, but even if we just take the numbers at face value that they're reporting, and take the fact that at the moment, most every place in China is on self-imposed lockdown. People aren't leaving their houses for the most part for more than an hour a day, maybe to go to the supermarket, or even once every few days to go to the supermarket. We have to assume that most of the factories in the country are closed right now. Meaning that everything that you buy, or let's say everything, think about a Walmart, right? How many products they have at Walmart. Just about everything, except for some of the food items that are made locally, everything in that giant mega store is made in China. So what happens, and that Walmart, I think, just came out with a statement a few hours ago saying that for the moment they're fine as far as supplies are concerned. What happens is if the situation continues where factories are offline and basically the entire country is offline, that we get to a point where Walmart can't stock their shelves anymore, and every other grocery store, and you won't be able to buy a toothbrush. Now, let's say you really need a toothbrush, right? And what does a toothbrush cost these days? 99 cents for 3?
Yeah, $1 and $2, something like that.
Yeah. So what happens when you get to the store and they're running out of toothbrushes? They're going to start jacking up their prices, right?
Yeah.
So what happens when you have to pay $10 for a toothbrush, right? That's going to seem a little bit insane, right? But what happens when you have to pay $20 for a toothbrush the next week, right? Or $50. If there's no other toothbrushes, I'm going to pay $50 for a toothbrush because I need to brush my teeth, right? This is basically the situation that happened to Venezuela, where you go to the doctor to get a checkup, and then the doctor quotes you a price for the surgery, and then you come back with the money 2 weeks later, and they go, "Oh, it's 100. You have to pay double what I quoted you 2 weeks ago."
Mm-hmm. That's crazy. Wow.
Yeah. So this is what scares me at the moment. I hope that it's just a hypothesis at the moment, and I hope that China is able to get this under control and get back online as soon as possible without any production gaps. But at the moment, the market is completely ignoring it. They're completely ignoring the risk because of the free money that's coming in. The People's Bank of China is pumping money into the system, where people feel that any short-term gaps in production are going to be covered by that free money. And I think that it's incredibly insane that big investors of the world and the people who move money on a daily basis are not freaking out right now.
Wow. I mean, that was pretty deep. Very good insight. So for every guest on the show, we always have a set question that we ask them.
This sounds like fun.
Yes. So first question up, tell us about 3 books that have changed your life.
Wow. The New Market Wizards was a book about
traders.
About traders. Yeah, it was just a guy who interviewed a bunch of different day traders, and I think that really gave me a lot of insight onto how markets work and how traders think. And I think that was in the beginning of my journey a very big part of it. I don't know. I don't read all that many books. I'm gonna have to say as number 2 would be Lord of the Rings. It was simply because halfway through the second book, the movie came out, and I just ditched the whole thing. And they're like, you know what? I'm all this work, and the guy's going into way too much detail. I'm getting bored and finding myself reading the same pages over and over again, and just kind of put me off reading altogether. That was really the last real book that I read. I think these days I get my information tiny bite-sized that my mind can handle. Twitter, for example, a tweet. I can read a tweet easy, right? And then if I'm really interested, I can read an article. 10-page paper is really kind of pushing it for me. It's like about the extent that I can do. But I do read Howard Marks every time he comes out. He comes out with these excellent 10, 15 pagers about the macro economy, and I really love them. So
website or blog, newsletter or something?
Yeah, Howard Marks is the CEO of Oak Tree Capital. So definitely recommend that for everybody. He comes out with them periodically, and they're always like these deep dives into these macroeconomic pictures and scenarios. He did one on negative interest rates, which I read 3 times just because it was just going into like, where is the world going with all of these negative interest rates and negative bonds, and basically hypothesizing about, wait a second, a company like Apple, who's got a lot of cash on their books, all of a sudden that cash is going to be seen as a liability, right? Because they have to pay for that cash through negative interest rates. The third
also has a book that's on my list. A friend of mine, Alex, just finished the book as well, and he has glowing praise for it. I think it's called Market Cycle, something like that, by Howard Marks.
Could be.
Check out. All right, sorry. Go ahead.
Oh, cool. Oh, thank you. I'll check that out. Maybe it'll get me back on reading books.
Yeah. All right.
Number 3, I don't know, man. Maybe I'll be corny. I'll go with the Bible.
Bible? All right.
5 books of Moses.
Okay, so next question. Outside of your family and friends, who are 3 people in history that have inspired you?
Wow. Jim Morrison.
Okay.
Any
reason why?
I just like his persona and his music. Nikola Tesla, certainly the inventor. Mozart.
Okay, very interesting choice. I like it.
Thanks. Yeah.
Okay, next question and last question. What are 3 actions you personally took that totally transformed your life?
Oh boy. Getting married and having kids, starting a family.
Mm-hmm.
I think that's got to be number 1 by far.
Yeah.
It's totally different. I mean, nothing is the same afterward. Like nothing about you, about who you think you are. Everything changes when you have children. Priority of time and in general, all your priorities are completely changed. You don't get as much sleep. Definitely not enough sleep in the day. I probably slept about 2 hours in the last 24 because my kid is sick. What can I do about it, right? I got a lot of work to do, and got to take the kid to the doctor and stay up all night taking care of him. So what am I going to do? But it's so rewarding in the end because, just when you hear them laughing and smiling or, reacting to something that you said or did, it just gives you a whole new perspective, I would say. Let's say, leaving eToro. That was for me an incredible risk. I hope that it pays off. I hope that, I'm able to build my dream, but it's not going to be easy. I was lucky enough to go out with a good name and a good reputation. But obviously those are no guarantees of success. So a lot of emotions around that. I'm working my hardest right now so that I can make sure that I can, when I'm looking back, I say, okay, that was a good move.
Well said. Well said.
Yeah.
Okay. All right. Well, I think it's definitely been great having you on the show. Where can people learn more about you and find you?
Quantumeconomics.io.
Okay.
It's that simple. Twitter, certainly. Yeah. Twitter and LinkedIn. I'm active on both.
All right. Sounds good. All right. Well, it's been a pleasure. Thank you for being on the show. And as we like to say, the moon is not the limit, to the moon and beyond. Thank you.
Perfect. Thanks a lot.
Since the creation of the internet, every industry has been turned upside down. Amazon changed retail. Uber changed transportation. YouTube changed video forever. With the invention of crypto, money is next. At the speed technology is growing, the future of money and securities are digital. 9 out of 10 millennials do not trust banks. The value of money relies on trust. Government debt is higher than it's ever been before. Central banks continue to print money. Fortunately, the world has a new solution. Experts predict in 7 years, 10% of the world's economy will be in crypto-based assets. Today, 1 billion people have access to the financial industry. Crypto
is about empowering the other 6 billion people by banking the unbanked. Do not underestimate this. Do you wish you invested in Google, Amazon, or Netflix before anyone ever knew about them? $1,000 invested in Netflix turned to over $500,000. At Token Metrics, we help you find the next Netflix. Token Metrics users think differently about investing. They are early adopters looking for financial freedom. They are people who see a better world. A world without international borders. We believe in a world where everyone has access to the next financial revolution. At Token Metrics, we are creating a bridge that gets you to that revolution. We will help you make sound investments in this new world. The world's best investors do not rely on their intuition. They embrace technology and AI to invest. Token Metrics uses AI to find invisible patterns in data to help you invest and trade in crypto. In the past, we have used our data-driven system to achieve financial freedom. Now, we are giving you the keys. We created Token Metrics to be the only platform you'll ever need to make money in crypto. We give you AI and access to crypto experts at the best price. The moon is not the limit. To the moon and beyond.
Disclaimer. Token Metrics Media LLC does not provide individually tailored investment advice and does not take a subscriber's or anyone's personal circumstance into consideration when discussing investments, nor is it registered as an investment advisor or broker-dealer in any jurisdiction. Information contained herein is not an offer or solicitation to buy, hold, or sell any security. The Token Metrics team has advised and invested in many blockchain companies. A complete list of their advisory roles and current holdings can be viewed here at tokenmetrics.com/disclosures.